Good morning, everybody. I'm Ed Parcaut, and normally here with Mike Kelly, and then we're Real Estate Jerky Daily. But he is on vacation this week. Yep, he's camping. I hope he's loving that little bed that they have to be in those RVs. Just not for me. We prefer the cabin with our, really nice beds. But everybody's got to have their thing. All right. So yesterday we had producer price index come out and it came in better than expected. Market did really well. Ended the day up about 25 basis points. Today we have the consumer price index, which also came in better than expected. It measures inflation for on the consumer level for what we feel. The other yesterday's was what the people who produce stuff for us feel. Increased by 0.2% month over month, in line with expectation, and decreased 0.1% to 2.9% year over year, better than estimate of 3%. The core CPI rate, which strips out food and energy prices, again, everything's expensive, increased by 0.2 for July and decreased 0.1 to 3.2% year over year, which is matching the estimates. Not as great as yesterday, a little bit better today. However, the bond market, yes, like I said, we were up 25 basis points today. We're up about 9 basis points. The 10-year is sitting at 3.8219. We were much lower than this a week or so ago when some other news came out of unemployment stuff. We don't have that this week. What do we have? We have retail sales tomorrow, initial jobless claims, and National Association of Housing Builders sentiment, what they see, housing starts and permits, and consumer sentiment on Friday. So let's finish today. Mortgage Banker Association released their mortgage application data for the week ending 8/9, which is last week, showing that overall application volume increased by 16.8%. Applications to purchase a home were up 3% for the week and down 8% year over year. However, refinances increased 35% from the previous week and now are 118% higher compared to 1 year ago. We're starting to see a lot more people do cash out refinances to pay off their high interest rate credit cards. A lot of those credit cards are between 22 to 29%, and some are even higher. That's very expensive to carry that debt. It's much better to refinance, pay those credit cards off, and save $2,000 a month, and then take that 1,000, half of that savings, and apply it towards your principal, and you're going to take that loan down to about a lot faster payoff. It could be about 18 to 15 years. All right, I already said what else is coming out this week, but I see a lot of people going and trying to find out the best next thing to get their business going. I think their next best thing that you should focus on is just calling your past clients. I know it sounds stupid, but that's it. Call past clients, see how they're doing. That is your number one referral source for your business. Call them, see how it's going, see what they need. Excuse me. Maybe they need something and you could help refer that to them. Maybe they need somebody to help, get a roof, this other stuff that they need. But you should be contacting your past clients constantly. And I don't just mean sending out an email and sending out a text. I mean, actually picking up the phone and calling them so they can hear your voice and understand that you really care about them. I think because the reason I bring this up is because I'm getting inundated by stuff in my email about, Todd Duncan is a guru of our industry, been around forever, than other people who are trying to get you to go into their coaching business because they can help you. You want to help yourself? Just start calling your past clients and focus on that and focus on your referral partners. See how they're doing, see what they need, and get back to them. Again, it's a short little thing today because Mike's not here. I don't think you want me to go back and forth myself having jokes and everything. I think that'd be a time for me to get admitted to a psychiatric hospital. Anyway, so to be back tomorrow, Thursday, talk about retail sales, initial jobless claims, and National Association of Housing Market Index. Uh, Retail sales, not really going to move much, but we could see initial jobless claims. Those go up. We could see the market move a little bit better for us. Right now, they're saying that it's looking like the Fed will lower a quarter in September. But I'm also hearing about a half. But I think they're going to do something. They're going to do a quarter. And that's pretty much all they're going to do. Now, I wanted to kind of show a couple charts, if that's okay with you. We have consumer prices that we talked about, the inflation today. If they looked at transportation, shelter, medical care, food, energy, and used cars. I thought it was unique that used cars are down 10% in cost. So that's a deflationary figure where they're going down. The other ones just aren't going up as much. Food is very expensive, still going up at 2.2%. Another thing I wanted to show was I got this from Matt Bryant at the Investment Consulting Group. He had this consumer confidence by presidential year, like Bush, Obama. If you look there, you can see Bush, Obama, Trump, and Biden. And you can see my face is in the way. Let me move me over to the side over here. Uh, if you look at Bush, it says that real GDP growth was what 1.9%. Obama was 2.2%. Trump was 1.8% and 2.7% was Biden. But so the one thing I liked about Mark Twain said, he said, there's lies, damn lies, and then statistics. Here's another form of that. Bush had some stuff going on, right? That was right at that bottom of where everything was falling apart and they had to fix the whole thing before he was out. That really affected with the GDP. So that was a 2008 fiasco with the housing industry. It took everything down. Then it starts going, then Obama took over and the whole market started getting better. I don't think it had anything to do with these presidents. This has to do with certain things that have happened during this period of time. Trump's big thing was we had the pandemic and we were shut down and that stopped everything growing. And then you have Biden where everything came back and that's where we're at. So you have to be really careful with it, listening to these statistics out there. I don't think it's really going to matter to you who is the president. What I mean by that is you're still going to be in business. You're still going to sell homes. You're still going to give loans. You're still going to do other things that we do. You're still going to do it. Or you're going to go move into a different industry. That's your choice. You need to focus on what you need to focus on, which is building your business and nothing else. For years, for probably about 15 or more years, I never talked about politics. My problem was I got on radio in 2018. So we've been doing the real estate radio show for the last 6 years. We just had a little anniversary last weekend. So we've been on the radio for the last 6 years, which you have to know a bunch of other stuff because people want to know about it. But you just being the regular person doing real estate and loans and stuff, focus on just what you're doing, build your business. You're still going to sell homes. You're still going to do loans. Just focus on that. Focus on your clients. And actually, this is what I tell everybody with all my other shows. We've been on this big push about niching down your business. You shouldn't do everybody's loan, meaning that you need to have a niche. You need to know what your perfect client is. For me, perfect clients are veterans. And then my other perfect client is reverse mortgages. Both of those deal with dignity, and I like to give people their dignity back. Anyway, that's just a little key for today. But focus on what are you focusing on in your business instead of everybody. Stop doing a shotgun approach, do more of a rifle stuff. Because if you can get your message to the right people, you'll do way more volume and you'll do more because they can hear your message instead of trying to be something to everybody. All right. That's all I'm going to get off my soapbox today. Thank you so much for listening to me. I appreciate you. Mike will be back on Monday. So you got me the rest of the week all by myself. All right. Make it a great day and we'll talk to you tomorrow.